HyperMeat.
What's going on, everybody? Super excited to be chatting with Ace the Book. Do you always go by Ace the Book or just go by Ace?
Ace is easier. The name comes from like my old DGen pre-crypto days. I used to punt on sports and stuff, and book is short for bookie. So it's not like I'm a scholarly academic. It's like I used to like to bet on sports.
That's awesome, man. So you are the co-founder and CSO of veNEST Protocol and Hype Engine. Okay, so I got to ask, when I read that, like CSO, does that mean Chief Security Officer or Chief Strategy Officer?
It's Chief Strategy Officer. We do take security extremely seriously. So there's been $250,000 spent on smart contract audits for veNEST, and we have a very good dev team that's making sure all of our multi-sig operations are buttoned up. But I'm more on the kind of the vision side, making sure that the product works as intended and everything is optimized. So strategy is the S there.
Well, before we dive into veNEST, do you want to break down to our listeners your background and how you actually found Hyperliquid? HyperMeat is proud to be sponsored by Silhouette, the shielded layer on top of Hyperliquid. Not only will you be able to obfuscate your trades, but you will be trading with some of the steepest Hyperliquid fee discounts that are available. Awaken Tax, crypto taxes for crypto natives. Could not have submitted my taxes without the team at Awaken. Awesome customer service, and they are always improving their Hyperliquid support. Get started with Awaken today. Shout out to Purposeful Node for being our newest sponsor. Validator selection is in your hands, which means who you stake with actually matters. Purposeful is part of the Kinetic Active set. They're aligned with the ecosystem, supporting builders, and even donate to in real life initiatives. Stake with purpose, stake with Purposeful. Nothing discussed on HyperMeat is investment advice. Always do your research and make your own decisions. I'm not responsible for any actions you take. Myself and my guests may hold positions in the protocols we talk about. All right, buddies, let's get back to the show. Really found Hyperliquid?
Yeah, my background, I'm what's considered an unk in this space. I've been involved with crypto for a very long time, but before that, I was in a completely different career. So I grew up wanting to be a weatherman when I was a kid, and I worked in meteorology for about 12, 13 years as a wage cuck sitting at a desk. I specialized in working with renewable energy companies. So the only overlap I would say between crypto and what I used to do is statistical analysis, a lot of data verification, modeling, but not on a financial scope. So the transition wasn't too difficult, mathematically process oriented kind of work, but it was, a new and exciting opportunity to kind of learn how to, manage my own money, optimize incentives design and models for growth. And I think, getting into crypto was initially a hobby. I would say back in 2016, I was just captivated by the potential of like the smart contract system and the democratization of finance and the accessibility of the financial system. As somebody who, it didn't come from much, and I didn't have access to a lot of the same things that, the qualified investors did. And I was like, okay, well, I feel like I can do something here on blockchain rails that I would never have been able to do previously. And that captivated me, and I fell down the rabbit hole. I've done a lot of different things in crypto. I've run a fund with some co-founders. I did some independent consulting for some crypto startups. I've worked as a business development and marketing head for a very large and well-known team, Aerodrome and Velodrome. Did some consulting as well on a suite project. But this is the first time I've co-founded anything, and I decided to build on Hyperliquid because we all love Hyperliquid. We see the organic traction and product market fit. What initially led me to Hyperliquid was just the ability to speculate on the FriendTech token, which is kind of funny. I was a big base user, big base degen. So I was active in like FriendTech. I had a room. I would buy and sell my friends' shares, and everybody expected the friend token to be like a massive TGE. So I was able to speculate on that by using Hyperliquid. I was never really a farmer. I just happened to kind of want to trade, and ended up getting a good airdrop from Hyperliquid at TGE, and that created a lifelong fan. And it was very fortuitous that Hyperliquid decided to launch the HyperEVM because I'm a big DeFi person, and I think this opens up a whole other avenue of distribution and builders and users with their programmable smart contract layer alongside the Hypercore DEX.
Wow, you've had quite the journey there to make it to Hyperliquid. That's fantastic experiences to have, though. Anytime you're trying to launch a new business, it's like, damn, you had it all covered. The weatherman market, though, that's pretty competitive. So if you decided you wanted to do that, man, you'd have your work cut out for you.
Yeah, it's competitive and you gotta grind. I mean, I think originally job openings would be in Bismarck, South Dakota, or Biloxi, Mississippi, places that I just would not really want to spend a lot of my 20s. um, and the bigger kind of tech jobs in renewable energy were in places like Houston and Seattle. And I think I found a really cool application for weather and renewable energy. It's kind of similar to like where I've landed now. I found an application where I feel like I'm a subject matter expert in Hyperliquid, which is the probably the top place to build, top ecosystem in terms of growth. So it's like I found my home and I'm happy and doing something I find very fulfilling.
Love it, dude. Congrats. The Hyper, your PFP. Did you get that at TGE?
Yeah, that's an original one of one that I decided to check a box to claim when they finally got released, and I love the Hyper project. I mean, price chart aside, I've held on to this thing. I feel like it's something that every real Hyperliquid believer, I'm not going to judge anybody for selling it, but it's like, it's mine, it's no one else's. It's only valuable because it was given to me. And it explains it gives me a memento or keepsake of my Hyperliquid journey. So I don't feel like it's ever going to leave my wallet. Proudly supported as my PFP, as a Hyperliquid user builder, evangelist. And yeah, maybe it's time to buy a few more. I think the latest Hyper floor price was like 260 hype. So people feel like NFTs are dead, and I see you're a Hypeo yourself. Super cool collection, and it's like every cycle is gonna have an NFT moment. I'm really curious to see what kind of plans are in store for the Hypers, considering they are like an official collection from the Hyperliquid Foundation, and maybe that means there's some kind of season three everybody likes to speculate on, or some kind of multiplier, access to new features. But yeah, there's no reason for me to dump it. I think the potential opportunity that comes with the Hyper outweighs any kind of like immediate gain.
I love speculating on season three too. It's always a fun conversation. Yeah, hopefully, your boy will eventually trade his way up to a Hyper because I'd love to get one rigged up for the show. I think that'd be really cool. So, what is Nest for people who don't know? And if you could like break it down in an easy, digestible way for somebody new to Hyperliquid, what would you say?
Nest is a decentralized exchange. Decentralized exchanges have been, the kind of the go-to place to trade on chain since Uniswap launched. AMMs have changed over the years, but there's simply a way for anyone to, generate fees on tokens. They can deposit two tokens and essentially allow other people to swap in and out of that pool. And each trade generates a transaction fee. The big thing, I'm not going to go into the whole history of like AMMs and how they basically went from Uniswap kind of as V1 in terms of like mass adoption to what we consider kind of the latest and greatest, which is like the MetaDex design. But Nest is essentially this MetaDex where we incorporate the primitive originally pioneered by Uniswap to allow people to trade. The biggest difference is Nest incentivizes liquidity providers with a token versus the swap fees. And you might think, well, why would anybody want to hold on to that token? They would just dump it immediately and it would go to zero. And it's like, well, we've seen that happen, right? Sushi essentially tried to do that. What metadexes like Nest decided to do, and this goes back to one of the godfathers of DeFi, Andre Cronje. The token itself captures 100% of the swap fees generated by the exchange. So there's real value capture that goes directly to the token holders. The caveat is it has to be locked for a certain period of time. And the longer the token is locked up, the higher the vote power and the fee capture the liquidity or the token holders receive. So the way this really turns into a very nicely balanced model, you have good incentives for liquidity providers. Essentially, you can direct a bunch of token emissions to the pools and incentivize people to provide liquidity. And then the tokens that those liquidity providers receive can be held and locked and used to generate all of the transaction fees generated by the pools that they allocate their votes for. So, this is something that's been very popular. I think the most successful version of this is Aerodrome on Base. They've received investment from Circle Ventures, from Coinbase Ventures, from other big funds. They've got 9 figures of TVL, and I think are generating probably 2 to 1 in terms of volume for major asset swaps on Base relative to Uniswap. And we see this as a huge opportunity on the HyperEVM. So what Nest has done is applied a similar design to what Aerodrome has on Base, with some slight differences in terms of the max duration tokens are locked for. So instead of 4 years, which can be somewhat daunting, the maximum amount of time is 6 months. And we've noticed that 90% of lockers just decide to lock that token for 6 months and leave it maximum locked, because they get the most amount of fees for their tokens that way. And we've eliminated something called rebases, which were popularized originally by the Olympus DAO model. You can essentially stake your tokens and get ongoing emissions. We feel like this is a bit of a unnecessary waste of token emissions. Like, those token emissions are going to be much more powerful if they go to liquidity providers to help grow the overall liquidity on the DEX and generate more swap fees. So those two kind of small changes were made to the token model, and we've got a whole other list of reasons why we decided to build on Hyperliquid that we can get into as well.
You name dropped too some Olympus style, dude. That took me back. that was a fun time too.
It was fun until it all kind of ended in tears, and people realized, we need actual, something backing this token that's worth 900 times NAV or something.
Yeah, no, for sure. So you kind of dove into the abilities of the Nest token and what users could do with it. You guys recently had this huge announcement, the Hype Spring, where people could unlock or claim their hype that they've earned through something called the Hype Engine. Can you, for like somebody who was watching all this unfold, I think it was yesterday or day before yesterday, super exciting, all over the timeline. How is this happening? How are people earning that hype? And then how are they participating in it? How's it work?
Yeah, I'm glad it popped up on your timeline. This was something that we've been planning for several months, and took a lot of patience, coordination, execution, and I'm super satisfied about how it all came out. So the way to start talking about Hype Spring is to give you an understanding of originally our tokenomics and the genesis allocations. So we have a team allocation. There's an ecosystem allocation that essentially votes for core assets on the HyperEVM. There's an assistance fund, which we are very akin to, say, the Hyperliquid assistance fund that just buys back tokens and uses those either as burns or incentives. The largest allocation at our token Genesis event was the Hype engine. And the Hype engine essentially is a 40% carve out of the tokens are permanently locked. They vote across the pools on Nest and use all of the fees collected by their votes to buy back Hype. So this is essentially the reason we wanted to deploy Nest on Hyper EVM is because of this pristine asset Hype. I think we'll dive into that a bit deeper in a little bit, but our Hype engine NFT amassed a treasury of about $200,000 worth of Hype. The cool thing about this Hype engine NFT is that all of the voters who have deposited their veNEST in the Hype engine vault are entitled to receiving this Hype. So this is where we think Nest really becomes more of a hyper liquid yield machine going long term. We're able to essentially leverage this amazing asset to incentivize voters by providing them with Hype. And we know that, like, unfortunately, a lot of people within the Hyperliquid ecosystem, they do a lot of like pre-token, farming, where they just want to get once the project goes TGE, they sell their whatever tokens they get for Hype. And we believe like the best way to keep those users happy is just to give them Hype. So like 40% of the fees on our exchange every week buy Hype and distribute those to veNEST lockers who've joined the Hype engine vault. And just to go a little bit deeper, the initial $200,000 Hype distribution was from all the fees collected between Epoch 1 and Epoch 23 on Nest. So just over 4 months of fees, almost 5 months of fees. I'm doing my math correctly. Yeah. Has accumulated a lot of Hype that was given back to the users. And overall, this APR, I think, bumped up voting APR by 80-90%. So it's a really, really great reason for why people should really, justification for why people got in early, farmed Nest, locked it up. And I think it lends credence to the sustainability of the MetaDex model on the HyperEVM. The Hype Engine Vault, before I move on, is something that we've built to make each weekly voting very, very easy. Instead of manually voting across the pools you want to get fees from, you can deposit your veNEST into the Hype Engine Vault. It automatically votes for you. So it's a set it and forget it strategy. And then with the rewards that you receive, it will compound your Nest position, increase your voting share, by adding to your veNEST, and also giving you a share of the Hype that was accumulated during that pre-epoch as well. So all of the new Nest locks that have been tracked forever that went into the Hype Engine Vault received a proportional share of the Hype that was collected during the epoch as well. And this is something we plan on continuing going forward. So new Nest locks will continue to get that Hype share as long as the users are depositing in the Hype Engine Vault.
I'm thinking about this from like a newer person perspective, trying to get involved here. You get your Nest, you lock it up in the Hype Engine Vault. You're going to get a share of the fees that are generated that's going to buy back Hype, and then you're going to get a share of that Hype. And I think it was like almost 5,000 Hype you guys gained, I guess, during that, was it 23 or 26 week epoch system?
Yeah, it was almost 5K. We we wanted to get it in users' hands, so we didn't wait one more epoch, but I think it was like 4980 was the number. And there's 190 Hype that were accumulated in Epoch 23 that's going to go to Epoch 24 lockers. And I believe the number of Nest locked and Epoch 24 was about 14 million. It's like $40,000 of Nest, and $40,000 of Nest lockers are going to be sharing 190 hype. So, I think that's like $7,500 today. And the APR on the new Nest locks is something insane. I think it's 900% if you annualize it. So these new Nest lock and the Hype Engine Vault opportunities are very lucrative. And the other thing to mention is that the Hype Engine Vault is probably the most aligned way a user can get involved. First of all, there's a set it and forget it setup. You're going to vote automatically using something we've built on the back end to optimize the fees in terms of like your votes across the different pools. You're going to essentially give us your blessing to go out and buy back buy back Nest with the fees. So your voting position does not get diluted. You simply compound more Nest into your VE Nest position. And then in exchange for this kind of maximally aligned governance model that you've bet on us with, you're going to get a portion of hype for those compounded Nest locks that you've added. So it's pretty awesome. I mean, this is where 100% of my VE Nest sits, and I don't plan on moving it. And another thing to mention is like none of the team members, in terms of like our team allocation, we've deposited none of that initial Nest into the Hype Engine Vault. We want to leave this for users, and it's only new Nest locks that are going to be incentivized. So it's going to be a good opportunity, stay fair kind of going forward. Doesn't matter whether you got involved from week one or you get involved today. It's the new Nest locks that really matter for sharing the new hype bonuses.
So I can get in now, and then my share of like whatever is earned is broken down per week. So like, or epoch. If I hop in now, then I'm good until the next hype. What would it be? Hype spring, like 6 months from now.
So here's where things are changing. The initial hype spring distribution was a one-time kind of backfill for all of the previous 22 epochs. Starting epoch 23, epoch 24, epoch 25, the distributions are going to be weekly. So it's going to be a fun game for users to kind of watch each epoch, like how much new Nest was locked. Because based on the number of Nest locks, the APR on the bonus that you're going to get from hype is going to change. So early on in the epoch, let's say we've got 200 hype we're going to give out to everybody who locks in epoch 25, which is the current epoch. Right now there's like nobody's locked any Nest yet because the epoch just started at midnight. But as people start locking, the APR is going to go down, and you can basically watch over the 7-day epoch to see like if you should lock Nest, how much Nest you should lock, because that's going to impact how big your hype bonus is going to be. So there's like a fun game theory kind of component here, but the massive change from the initial distribution to like what's going to happen going forward is that each distribution is going to be on a week to week basis. So we're going to see, it's going to be raining hype essentially every week during this period.
There we go. That's the clip right there. Raining hype. I'm definitely going to be putting some Nest in that hype engine. It'll be interesting because there's a bunch of dynamics that go into this now. Like you said, just kind of watching the games that people play, and then watching the price of Nest. This is cool stuff. It's the kind of stuff that gets people excited. It's you got to listen and learn a little bit, but I think it's interesting. And for anybody who just listened to you, I feel like that was alpha. Not
Yeah,
financial advice.
just one thing. I mean, what we are offering in terms of kind of original DeFi ethos, which I personally think we need to kind of gravitate back toward. Everybody seems to want to farm a protocol before they issue a token. And then as soon as the TGE happens, they're like, okay, there's my ROI moment. I'm gone. I'm on to the next thing to farm. That meta, I feel like is not sustainable. Unfortunately, it seems like there's a large pool of mercenary capital that continues to kind of jump from chain to chain, from protocol to protocol. And as soon as the TG happens, they're gone. Nest continues to provide the token just via liquidity provision. So I know you may be more of a like a speculator or trader inclined, and you like to watch charts and make decisions on buying and selling. I think what we need to do as DeFi generally in the industry is continue to educate people on the fairness of the primitive itself. So you can get Nest tokens just by LPing on our exchange, and you can, depending on your risk tolerance or your knowledge of how to do it properly, there's very good tools out there. So if you're just a hype maxi, you can provide liquidity at a K hype hype pool, and APR is like 10% or higher. If you just like stable coins, you can do the same thing in USDC, USDT pool. Um, I think we've seen 15 to 20% APR. These are phenomenal returns on relatively low risk, high, high correlation assets. Or if you like to take a bit more risk, but you're just not good at balancing liquidity and keeping it in a range, there are vaults that we've partnered with, Amplify. They used to be called Ichi, but they're a phenomenal vault builder, and they essentially do all of the rebalancing for your liquidity, and you can earn 80% APR in Nest tokens. So this is where you can kind of see the long-term strategy of having like a hype yield machine. Let's say I know you're a hype maxi, you want to put your hype to work. You don't want to suffer a lot of impermanent loss like by going into like a hype USDC pool. But if you use the Amplify Vault, it will keep, I think, 80% of your capital exposed to hype. A small amount of that will be exposed to the stable asset, but it rebalances to make sure that you're continuously maintaining like that ratio depending on how high the hype price goes. So you're minimizing your impermanent loss, you're maintaining exposure to like your bullish asset hype, and you're earning 80% APR on Nest. And like you basically take your Nest tokens, lock them up, put them in the hype engine vault, and you're going to get hype every week. So it's hype on hype, right? This is the story we really want to tell. We're kind of putting this in practice ourselves, and the next step is going to be education, case studies, and convincing everybody like we are really offering like this once in a once in the ecosystem, once in a DeFi generation, I would say, opportunity to generate potentially the best asset ever just by leveraging the stuff you already hold.
Well, this is the second or third time you talked about how pristine the asset of hype is. Or what is your rationale by why you keep referring to it as pristine?
Yeah, I mean, hype has probably the most storied history of any DeFi project uh, in probably blockchain history. Not only is it a phenomenal product with real users and product market fit, competitive with maker taker rates as centralized exchanges, and the I would say a risk engine that works as well as say the centralized exchanges. It has this insanely exciting generation event TGE story. They gave away, I think originally it was like $1 billion in airdrops, and that number just kept growing as the token went up in value. So no VCs, no investors, they've eluded this massive overhang problem that other big infrastructure plays have had to deal with. And you really can't beat that story. The hype asset itself, I think we all understand like the structural flows that it receives. You're going to consistently have buybacks from fees generated by the exchange with the assistance fund. You have staking required to generate to get lower fees on trades on Hypercore. There's HIP 3 markets now. There's HIP 4 coming, or just starting to expand. And hype itself is like a phenomenal asset to be used as collateral in the HyperEVM. Like they've enabled portfolio margin. I guess very early days portfolio margin with Hype as collateral, but we anticipate that growing significantly, which is one of the bullish theses that I have personally for HyperEVM. It's like people are going to hold their hype, hold their K hype, borrow against that to make sure they can trade on margin on Hypercore, and the activity around liquidations and trading is just going to explode on the HyperEVM side. So if you're not bullish hype, I think you've either stepped away from crypto or you're, in a coma because the amount of attention and awesome activity and leadership around the ecosystem that's been probably over the last 2 years is just unmistakable and impossible to ignore. Even the TradFi types are talking about it. Bloomberg and MSNBC. Did I say MSNBC? I meant CNBC. Sorry. Talk about it all the time. And we've got, the youngest digital asset treasury of any asset in crypto launched this week. It's just very exciting. I think it's a solution to a lot of the big problems that crypto has faced in the past around poorly designed tokens, lack of value capture, lack of real adoption. So, it all flows back to hype, and that's why I consider it like pristine. Hype and Bitcoin really, you could argue one or the other. I think they're different tokens completely. Like Hype is the best of any smart contract platform. Bitcoin is, the original immaculate store of value, scarcity, whatever, secure asset for the digital age. But it's an unmistakably significant part of like financial history, and it's really really exciting to see where things are going to be going.
Amen, dude. I completely agree. It's just the way they design the token and how all the value flows back into the asset itself. I got my father-in-law who's an older dude. He's like super bullish on hype. Once you take the time to explain all like how that stuff works, like people are just like, wow, this is incredible. And I've even got him playing with mobile apps, just doing some trading. Yeah, it's
Nice.
amazing time, amazing energy right now. We talk about how the things that Hyperliquid like Labs does kind of like suggests alignment in different ways. Like, what does alignment mean to Nest, and why is it such like a core piece of what you guys are doing?
There's two major threads in terms of alignment. I think the most obvious one is being hype aligned with buybacks baked into our token model. We have the assistance fund that buys back Nest every week. We have the Hype Engine Vault that buys back Nest and compounds that every week. And we also have the Hype Engine NFT that buys Hype and distributes that. So those we feel are extremely aligned with some of the principles established by Hyperliquid. Alignment in the terms of the product itself, I feel like comes down to one thing. We have tokens given to the team that are locked forever, and those generate, essentially our revenues that we use to grow the team, pay ourselves, pay for expenses. So if we're not able to capture value to the product, the token itself, the veNEST tokens, will not generate fees. Therefore, we will not have revenues required to sustain a product. So we have to end up working our asses off to make sure that we keep things going. And that means we're aligned with every veNEST holder, because if you decided to lock Nest and vote and get fees every epoch, you essentially are making a bet that long term that Nest that you've locked up is going to generate enough of a return in terms of the weekly voting rewards that it's not a significant risk to lock up that original Nest capital. So you're fully betting on the sustainability, the viability of the product. We as builders have done the same thing by max locking and permanently locking our allocation. We'll never be able to sell those tokens. So we have to make sure that this product is useful, viable, sustainable, which is very well aligned with everybody else who is veNEST voting as well. And I love that principle, not just from like the original design of the MetaDex, but for anybody who's building anything in not just crypto, but any product. Cash flows are what really run the business. It's not, you know, giving yourself a token that you eventually can cash out by selling when your cliff and your vesting gets hit. It's like you have to make sure that this product works long term. You can bring new people in to share revenues from the team allocation if you need to, but no individual team member has like tokens that we are holding. We have essentially a multi-sig that shares these permanently locked tokens. We distribute some revenues to ourselves, to our partners, to our service providers, and that's how the business sustains, which is exactly how every token holder, token locker voter on the exchange, wins.
When you were breaking that down there towards the end, that made me think of that article that you recently wrote. You wrote this whole piece about transparency in crypto, like founder accountability, and how the token should be more like equity instead of speculation. I'll make sure to link that article down below the video if you guys want to check that out. I think it's worth the read. But you said something like, to quote you, you said, selling a productive asset to fund operations is the original sin of crypto. What did you mean by that? Can you unpack that for us and then kind of talk about what our industry is doing wrong, I guess, with transparency?
Yeah, I mean, there's a bunch of different things that you could grab from that sentence. I think the first thing is we just don't have enough productive assets in crypto. Even if 100% of the what is it EIP 1559 in ETH goes back to burning the asset, you don't have enough productivity on the network to make this productive in terms of like the fundamental value of ETH, the asset. And you can argue till the cows come home about like security of a network, Lindy of an asset, collateral on lending markets. But at this point in our industry's life cycle, we're going to become more and more institutionalized with people who've got decades of fundamental valuation experience looking at these things like equities. That's my belief, at least. And as clarity kind of progresses through Congress, I think that's the way things are going to be going. So you have to show that there's like a productive and valuable capture to the asset itself. I was originally drawn to the MetaDex token model because I did see the productivity in terms of like traditional financial metrics. And you could find analysis out there about things, around price to sales, price to earnings. It's really cool to start seeing some of this in the crypto space because we've essentially thought we were like a special snowflake and TradFi had to use these metrics. But at the end of the day, it's like these are our finance vehicles and we need to look at these on a level playing field. So there's things that MetaDexes provide in terms of value and token fundamental capture that I think are super, super cool and attractive. And so, yeah, first things first, productive assets, we need more of those. That's a real it's a real gauge for product market fit and finding value. The other thing is like, why are you selling tokens that you've given to yourself if you're looking at like funding operations? I think that leads to very significant misbehavior. We've seen this for way too long in crypto. It's like as soon as a team hits their vesting or their cliff, you're just consistently seeing tokens being sold on the open market just for cash, and there's no transparency, disclosure around it. And the people who get hurt are the retail buyers. And I think the big difference here between, say, TradFi and crypto is that in TradFi, there are regulated disclosures that need to be released to the public. So it's nice to know that Blockworks is actually taking the lead on this and trying to put a framework in place in terms of like, if you're a founder and you are given liquid tokens, you must disclose how much, what the vesting terms are, when you decide to sell those. This is a big step forward. I still think tokens should. It's hard for me to justify having a team sell tokens to fund operations, and we've seen this done continuously. It's been pointed out, specifically about like the Uniswap Foundation. That's one way that they've been able to fund significant marketing and operations and development costs, is just by selling tokens. And if you have a good protocol, you should be holding those tokens or buying them back because they're giving you additional cash flows. So that's something that we've baked into our design. It's like we want more of the tokens because it creates additional sources of revenue for us. That's the other thing. And I think, that's like kind of the final point. It's like cash flows are king at this point. So you want to make sure that those cash flows are being returned to the token. In the MetaDex design, it's 100%. I think I'd love to start seeing more teams incorporate this into their initial token design. And yeah, I think that's kind of how those three things come out of the sentence of selling a productive asset to fund operations is the original sin. Where have we gone wrong with transparency? I think number one, we just haven't required disclosures, like I mentioned, in terms of team token allocations, team token sales. Having continuous vesting and token unlocks for VCs is a big issue. Regardless of the product market fit of the thing that someone invested in, they're going to get their tokens and they're going to be able to sell them, even at a loss. So one thing that I've noticed recently is that the Mega ETH KPIs are awesome. Like, they're not going to issue new tokens if they don't hit their goals. Like, that totally makes sense. You don't need that equity out there because it's only going to dilute other holders who aren't getting the return that they anticipated. So I think we're going the right direction, and again, Blockworks taking the lead on this is fantastic. Actually, during this call, during our recording today, we're expecting Blockworks to release their token transparency framework. They're kind of their B1 on Nest Exchange. So watch out for that.
Ooh, there we go. That's pretty exciting. I'll make sure to grab that when they post it and also put it down below the video if you guys want to check that out. Yeah, I think transparency is a topic that we need to talk about collectively as a group. There are plenty of recent examples I can think of when you go, all right, so much hype when this thing launches, and then you're like, oh my gosh, they massacred my boy. You know what I mean? Like, it's just like a straight down chart. I'm not going to name names, but yeah, it's pretty crazy.
Many such cases.
Yeah. So maybe having some more transparency around it, maybe it'll negate the hype a little bit, but it's best to be an informed investor, as people like to say. When people see an exchange like this, one of the questions they say is like, how are they going to avoid becoming like a temporary flavor of the week? And how are you guys building something sustainable long term? I know you said the hype engine, that makes a lot of sense, but like directly answering that question. And then, like, in your opinion, what does Nest look like 2 years from now?
Yeah, I mean, honestly, I kind of wish that we had the opportunity to be the flavor of the week. We built up a lot of anticipation to our TGE. We got an awesome group of very well educated and aligned investors to essentially get a veNEST allocation up front. Hired an amazing marketing agency to help us with the go to market. And the TGE was not that exciting. I think it was a bit of a flop. So we were on this kind of downward roller coaster for 7 months. We launched, maybe not that quite that long, 5 months, but we launched in November, and our token was down 98% in mid-April. And when a product itself relies on the token and the token price to really perform, that's it's stressful. And we gutted it out. We grouped together. We made some important decisions about kind of readjusting our strategy around the hype engine, and I think things are turning around. And so, flavor of the week is something that's sort of off the table for us at this point. Maybe we're having a moment with Hype Spring, and I think the video and the article that we released this week are getting a ton of distribution, which we're extremely happy about. I think I mentioned earlier in the call like how excited and pleased we are with our execution. But this is a long game, and this ties right back to the alignment component. We need to continue to build and grow for us to really succeed. And it's so much of a positive sum product, because the more liquidity, users, partners we onboard, the more incentives we essentially can distribute. And this helps all of these other teams grow. So a great example of this is how Aerodrome was sort of the hub and the wheel of Base, and all of these other protocols were the spokes. Aerodrome incentivized lots of new liquidity, but and there's no base token, so this is one of the big issues that they encountered. HyperEVM is still very early; it's like the alpha stage. So we're trying to be very, very patient with how things grow. Our LPs are small, but very informed and very excited about the future. We think there's going to be a lot of TGEs. We think there's the portfolio margin is going to bring in a ton of liquidity. We think the tokenized stocks and commodities are coming to HyperEVM, not just the HIP 1 markets, not just HIP 3. It's going to be tokenized assets that can be used as collateral in DeFi. This is just going to be where HyperEVM kind of grows alongside, but independently of like the hypercore. So this is all happening as part of the plan. But what we really see going into like the next couple years is trying and reframing and reimagining this idea of an exchange as a way for users to generate hype on their assets. So like a yield machine. And we are very slowly but methodically making UX and product adjustments and feature rollouts to make this a more accessible and user-friendly experience. We know there's going to always be DeFi power users from the generations before, people who started doing Uniswap LPing, who are doing earning Yearn and Wi-Fi tokens, who are earning comp tokens. That UX is still kind of prevalent today, but we know that the average DeFi user is going to want the more Robinhood-like experience, and that's where we'd like to start pushing our product. The back end is very solid, well audited, battle tested. The token model is well designed. The tokenomics are going to preserve a strong kind of floor for Nest. And we're at this point where we can abstract away a lot of the UX and make this like a really great experience for anybody. And the TAM for this kind of a user is huge. We believe Hyperliquid is going to be an amazing distribution source. HyperEVM is going to eventually attract a lot of new attention. And it's our job to kind of build a great product and get it out there for when the next wave of adopters comes along. So 2 years from now, we're still going to maintain the core product and infrastructure, but we want to build much more accessible kind of yield products on top of Nest. So some of that is very close to coming out to market. A lot of it is very early stage ideas, but we're going to continue to innovate and really just try to keep growing the HyperEVM.
Love it, man. To all the haters who say HyperEVM is dead, I challenge them every chance I get, man. I feel the energy there. We're figuring it out, and there's lots of parts that like aren't fully flushed out yet. We're starting to see people dabble in the precompiles a little bit more too. That's interesting stuff. Lots of mobile apps, like I mentioned before too. Are you guys aiming to get in on that action? Are you guys thinking about doing your own, partnering with someone?
There's a lot of cool mobile apps. You're right. I'm super impressed with what I've seen. We we know it's a lot easier to make a mobile app today than it's ever been. You know, our current UI is accessible via mobile, but like it's not a standalone app. So the short answer is yes. The long answer is how are we going to build that? Like how do we position it? What does it look like? That's kind of the bigger question mark. And we want it to be something unique from what's currently available via mobile. So it's going to be something that requires a bit more thought and really is designed for, a new audience. Because we're not going to invest time into something that doesn't really grow the product in HyperEVM. We want to make sure it's like serving a specific purpose for attracting a new kind of user, and I guess that's the way we're thinking about it.
You want to make sure that's what the goal is. And if I were to suggest things, you can disregard my my statement if you want, but there are a lot of mobile apps, like I said. So maybe partnering with the right one to provide like the spot side, because a lot of them are just doing perps. Like if you were the spot side and then getting access to all those hyper EVM tokens, like the memes and stuff like that, and then overall providing that like hype engine, like simplified so you can see and kind of have a nice estimation. If you were to find a partner like that, I feel like you'd get some pretty good usage out of it. So I don't know, just my 2 cents. Listening to you talk has helped me understand certain aspects a lot more. Let's talk about something more general before I ask you my couple parting questions here. Huge news today, USDC acquiring Native Markets USDH. Lots of different takes all over the timeline. I do want to read Jeff's take, and then I want to ask you your take. So Jeff said, excited to see everyone come together for this historic moment. AQA V2 brings the protocol aligned stablecoin model that native markets trailblazed to USDC with Coinbase and Circle's commitment to Hyperliquid. The community no longer has to choose between liquidity and alignment. Our industry will face adversity as we continue to grow, and it gives me hope seeing titans of the industry come together to build for users and bring all of finance on chain. Whew, like I love that. What's your take?
I mean, I'm just thinking right now, like how, pun intended, full circle this has come, right? Originally, Circle, you know, wasn't going to play ball, and they were like they were a late mover to setting up the bridge directly into Hyperliquid. They didn't participate in the kind of the competition for the maximally aligned Hyperliquid native stablecoin that Native won. And here we are today, this huge deal. Essentially, they bent the knee to Hyperliquid. They were like, okay, we're gonna play ball. We see how you are kicking everyone's ass in the perps land. We're gonna give up a significant amount of the yield that we generate on our assets, and if you make us the canonical stablecoin essentially of the ecosystem. So I do think it's a win for them, for Coinbase and Circle, because Hyperliquid, just the ethos, the distribution they'll get, kind of the funds and the users that are active already in Hyperliquid are going to be much more accepting to kind of these centralized entities. The biggest winner, I think, is Hyperliquid. They're going to get a lot more stablecoin yield that goes to the AF to buy back Hype. And finally, Native gets a payout as well. They're a phenomenal team. I think they do get a W in the situation. All of them are such devout Hyperliquid bulls and lovers that I very much doubt they just disappear forever. We know Drew and Max, and they're both guys that rock a hyper PFP, have been trading, building in this ecosystem for years, and likely decide to do something new that's Hyperliquid focused. So I see it as a very, very big day. If there's anyone who's got to take a bit of an L, it would be like the Coinbase Circle combo, because they're having to, essentially swallow their pride, buy some hype to stake it as an AQA. But I think it's also like they see the future and they see kind of the writing on the wall with clarity and a lot of the things happening in Congress, and they're like, Hyperliquid's not going anywhere. They hired top tier attorney Jake Travinsky. He's been doing a lot of great things. So I think they'd rather kind of live alongside Hyperliquid than be adversarial. And as we see how things kind of move forward, it's going to be like hopefully even closer of a partnership. I don't know how well Coinbase perps are doing, but if they just decided to implement builder codes, this would make a lot more sense. They're going to provide a ton of distribution and liquidity into Hyperliquid. Hyperliquid is going to create this very, easy liquidity layer for Coinbase to tap into. So I think it's a big day in terms of like how this changes things in USDH and for USDH and HyperEVM. It's like it's a bit of an untangling process, right? You've got loans and lending markets. You've got perps markets that have to get transitioned. You've got liquidity pools like Nest that have to be migrated. We were extremely bullish native. We loved I think I mentioned the team, the concept, the professionality. They built some great stuff. So we'll have to make some adjustments in our liquidity pools and our emissions allocations. Like we're going to see a lot more USDC trading volume now. So yeah, we'll have to make those adjustments to our voting strategy. But yeah, I don't think it's a big problem, and I've read it's going to increase Hyperliquid revenues by over 9 figures. So really big win for all the hype holders, obviously.
First and foremost, I'm saying congratulations to the native markets team. I think that's a huge story, tremendous growth story by them. They're getting USDC to agree to those aligned terms, and they're even better. Like you mentioned, Blockworks. One of my favorite representatives of Blockworks is Shonda Devons. They said at the current 5 billion USDC base, that could imply a 137 to 160 million annualized revenue at 3.5% yield, or a 22% step up versus the current annualized revenue. So that's amazing. That's constant buying pressure. I think MLM did like some math, and he said that's like $440,000 a day of buying pressure. Was there anything else you wanted to tell our Hyperliquid enjoyers about Nest?
I think we've covered everything that needs to be covered about Nest. I think what we'd love to see are some more curious people joining our Telegram and asking questions. The best way to understand products is by trying them out, experimenting. There's a very cool ecosystem of kind of third-party integrated products that help make the UX easier on Nest. So coming in and asking questions, getting some advice is something I would love to see as a follow-up from the listeners today. Also, I'm curious about where people think HyperEVM is going. That's something that's I feel like is under discussed, and we've seen everything from like the HyperEVM is dead take to, it's going to be the next big ecosystem, and that's why Jez is building paper trade on HyperEVM, and it's still an alpha. It's never going to change. So I'd love to kind of hear more around that. And I guess the last thing I'll leave the listeners with is it's a good thing to get involved today with Nest because of the hype spring distributions. Now it's like I think it's still early. You said alpha. I don't know if it's alpha. It's just people are not really paying attention, and it's hard to get attention these days. But 900% or so APR on locking Nest is pretty amazing. So it's a good time to get started today.
I don't know if you've caught any of my prior interviews, but I always like to end with new guests with this one question. Hopefully, you're not a vegetarian. When you go to a restaurant, what is your favorite cut of meat?
I am not, and I haven't heard any of your previous episodes, so I'd love to hear kind of the beef kind of story from your point of view. I'm a medium rare prime fillet guy, as long as it's not too charred. I do appreciate a bit of a grill at the end of the cook, but if it's too charred and charcoaly, it ruins everything. So, um, medium rare prime fillet for me.
Love it, man. What are you, my toddler? My toddler's like, can you cut off the crust, as he likes to say. No, I'm just
Well, I'm
joking.
impressed your toddler eats steak. That's how you're getting him started early.
Oh yeah, man. I mean, dude, my name is Beef. So, short story, I'm just a huge meat enjoyer. You know, you can probably somebody's going to clip that and then make fun of me with it, but you know what? I love beef, and I've dry aged my own roasts, and I've utilized the fat to make dry aged burgers, smash burgers. Like I like cooking, man, and meat's my specialty. I can cook all kinds of different meats, but if I had to pick one, it's always going to be beef. And for me, it's most of the time, about 75% of the time, it's a ribeye, medium rare. And then the other 25% is like you. I like that nice, like barrel cut filet. And now I'm a
Let's
nest enjoyer too.
let's get you a second podcast on cooking because I would listen to it. I'd love to learn how to dry age my own meat because I'd probably be saving a ton of money and I'd be a lot more satisfied with the end product. So keep
Yeah,
may have
dude.
to have a follow up conversation.
Yeah, maybe I can do like a little special segment. It's actually not as crazy hard to do it as you think. There's a few key ways to do it. So we'll save that for another day. But make sure you guys give Ace the book a follow. I'll make sure to tag him below. Follow Nest. Turn on those notifications so you guys keep the information up to date on how that engine is doing. So thanks a lot, Ace, for hanging out with me and letting everybody know about Nest.
Hey, thanks for having me. It was a lot of fun. And yeah, come check us out. Use nest.xyz.
Hyperliquid.